Are you brand new to the stock market? Don't know where to start? No worries, because in this video, I will be sharing 3 companies that I would buy if I was a newer investor. With thousands of stocks out there, it can definitely be an intimidating process to pick the right one for you. Now, whenever I pick my investments, I want to know that this is a company that actually has a lot of demand for its goods or services. I want to see that revenue continue to grow and grow over the years. I also want to understand the company that I'm investing in. So if it takes me more than 3 minutes to explain what this company does, it's probably not a good beginner stock. And best of all, the 3 companies that I'm going to be talking about today, they all pay dividends, which means every quarter I'll be getting a check from them for just being a shareholder. If you own enough shares of these companies over the years, you will make enough money to cover all of your living expenses and reach financial independence. But that starts with making good decisions over and over again, such as hitting that like button for the algorithm and making sure you're subscribed, and let's get started. So the first stock I really love is Pepsi. Now I know you've heard of this company because it's really popular for its soft drinks, but it's also so much bigger than just Pepsi Cola. Buying a share of Pepsi also means that you're owning Gatorade, Tropicana, Aquafina, Mountain Dew, Frito-Lay's chips, Doritos, Quaker Oats, and so many other products are under the Pepsi portfolio. By becoming a shareholder, you really do own a small percentage of all of the money that Pepsi makes every time one of their products is sold all over the world. Pepsi has had fantastic growth these past 5 years, going from $63 billion in 2017 to nearly $80 billion this past year. And this was when so many bars and restaurants and sporting events where Pepsi would normally be served were actually closed due to the pandemic. It's no surprise that Pepsi is giving guidance of about 6% year-over-year organic growth, which for a company that's as old and as established as Pepsi is, that's actually doing very good. Pepsi just raised their dividend for the 49th straight year, which means they are consistently and reliably pocketing their shareholders' pockets with money. I'll even share my position in Pepsi with you. I currently own 12 shares for about $2,000 in equity. They make up just under 2% of my portfolio. And for simply just holding on to my shares of Pepsi, every year I make $51.60. And I don't do any work other than just continue to be a long-term investor of Pepsi. The next best stock for beginners is good old Apple. Now you knew this one was coming. Everyone recognizes the Apple logo and what that brand represents. You know they're making so much money selling the same phones over and over again. They sell accessories, they sell tablets, the App Store, they have subscriptions, and so much more that Apple provides. Apple's earning growth these past 5 years are not of this world. They went from $229 billion in 2017 to $366 billion this past year. It's no wonder Apple is the largest company in the world at a $3 trillion market cap, and getting exposure to this company is something I want to start doing day one of being an investor. Apple has a ridiculously loyal customer base, and they currently have 785 million paid subscribers. Apple also has the potential to acquire other companies with its war chest of over $200 billion in cash on hand. Now that's a clean balance sheet. They have plenty of money to increase those dividend payments and buy back more shares. Apple really does have a moat that I don't think any other company can come close to cracking. We all use Apple products every day. They are all around us, sometimes literally on us. As Apple continues to develop its AR and VR devices, expect even more money to come pouring into this company. Oh, and did I mention there's some heavy rumors of an electric vehicle that Apple is developing? That should kick off sometime this decade, and that should mean even more money for Apple. Apple has given a 372% return over the past 5 years, and I have been very fortunate to slowly grow rich with Apple. I currently own 39 shares of Apple worth about $6,700, and that's a pretty nice return of about $4,000 I've had over the years. And I'm getting $34 every year for simply just holding on to Apple and collecting dividends. And that $34, that's the number I'm really trying to grow. That's the number I'm trying to get higher every single year. Apple has a strong buy or buy recommendation from 37 analysts and 0 sell ratings. With a 12-month price target of $193, there might still be a lot of upside for this company, even though it's grown so much over the years. Now, this next company you might be surprised to see on this list, But I think it's important to get exposure to real estate, which has grown so many millionaires than any other asset class. That's why I think public storage, ticker symbol PSA, is a good investment for beginners. The business model is super easy to understand. They manage and acquire self-storage facilities. If I got too much trash at my place, I'll pay someone else to keep my trash at their facility. Simple as that, super easy to grasp and understand. The amount of people who utilize a self-storage facility has actually went up over time to about 1 in every 10 people now use self-storage. And believe it or not, younger people such as Gen Z and millennials, they're more likely to be the core customer base of PSA here very soon, as there's only so many live, laugh, love, home decor items a household can hold on to. This is a company that's been in operations for over 50 years, and they own over 2,800 locations in 39 different states. They're the league leader in storage space, and you got other competitors such as Extra Space Storage, Life Storage, CubeSmart, but none have been able to add more square feet in the last 15 years than PSA. PSA has a ridiculous 76% operating margin, which is the amount of profit a company makes on the dollar of sales after paying for costs, such as wages and other variables. Although PSA has paid dividends for 164 consecutive quarters, they unfortunately have not raised their dividend in a couple years. While the share price has continued to go up, the dividend has remained stagnant. PSA is up 80% in the last 5 years, and that dividend yield is about 2%, which is actually pretty low for a REIT. But I wouldn't expect it to continue to stay that way as PSA continues to expand and build more facilities in a sector that is rising in demand. Now that's 3 stocks that they all pay dividends, and I think they're great for beginners. They are easy to understand businesses, they have shown increased demand for decades, and they should continue to be profitable businesses for the foreseeable future. I understand these are boring companies, but boring companies are the best investments I found because people need them for their day-to-day lives and they pay the bills. Now make sure you're subscribed and that you like this video if it brought you any value. As always, my videos are found in podcast form under the Collect Cash podcast name. Now this is all just for my opinion and for educational purposes. Always do your own research.